What is up, YouTube? It is Tuesday, August 27th. Today was kind of a little bit of a rough day for me, but I still came out winning. I took 3 trades. One of them was a loss, 2 of them was a win. So I ended up coming out making a pretty decent amount. So I'll get into why I took the trades that I took today. So originally this morning, I came in with a bearish bias, mainly because when this candle was developing, we were moving on down here. So I thought we were going to get a move down at least into this 4-hour fair value gap that we have right here, sweeping that low and, tapping into that, and then maybe even, further going down, because it looked like we were just creating a lower high right here, right? These 3 candles here were not existing yet. So it looked like we were having, this high, this low, this lower high, a higher low, lower high, lower low, displacing through here, creating kind of like a market structure shift or a breakup structure really to continue the structure to the downside. And so when we came in here tapping into this 4-hour fair value gap, I thought we were going to continue moving on down in the structure. So I marked out, areas that were supposed to hold us down. We had this 1-hour inversion fair value gap that got created, right? This is the opening candle right there from 9:30 to 10. And so this 1-hour inversion fair value gap, I wanted us to tap into it and then reverse off of that, because it was just going to be a retracement. I wanted to see on the lower time frame having a a move on up and then dropping back down at the opening candle, which we did not get. As you can see, we moved on up and we kind of just stayed in this area. So I marked that as it needing to hold us down. And I also marked this 15-minute fair value gap that was right here, which I also thought was nice because it was within, or actually it encompassed that 1-hour inversion fair value gap. So overall, I had high confluences to show me that this was going to move on down. We looked like we were getting a liquidity grab here, market structure shift, lower highs, lower lows. It looked all perfect, like it wanted to do that. So after the opening bell, right, we noticed that we had a move on down. Let's go down to the 1-minute time frame. So after the opening bell, and we can also turn on the quarterly cycles, we had accumulation here in the very beginning, and then we had a move on up, right? We took out that high. We had a move on up for the manipulation here. And so this looked good in a sense to be able to come down. The only problem with that was the fact that we had not tapped into that area that I wanted to see. And also adding into the fact that overnight for Asia, we had our Asia session. And then for London, we manipulated above the Asia session. And I expected New York to have a move on down. But then for the New York AM, we had this accumulation right here. A manipulation move down. And what ended up happening was a distribution on up. So that's why I always say the quarterly cycles, use it just as a frame of reference, but don't trade solely off of that. And that's why we always look for invalidation points. If we got a 15-minute candle close above that 15-minute fair value gap, we were going to switch our bias to being bullish. And as you can see, I waited for the entry model that I always look for. If I'm looking for downside, I want to see a bullish fair value gap get created and then have that be inversed. And so we just kept on moving on up, consolidated a bit, waited to see what Q4 brought, consolidated a bit again, moved on up. And then here at 10:30, I thought, okay, now we're in Q4 for the morning session. We could see kind of a retracement or hopefully a reversal here, especially because we're in this 4-hour fair value gap. But the close above that 15-minute fair value gap kind of had me hesitant. So I thought I'd give it a shot here when we had a close below that 1-minute fair value gap. Yes, it was a trade inside Q1. Yes, that was wrong of me to do. But because I just got so impatient from the morning, I took that loss with strides. I was like, you know what? It's okay. It's all good. I'll wait to see what Q3 brings, which was my original intention. We saw this move on up. So we had accumulation for Q1, manipulation on up. And I wanted to see that breakdown for Q3. We got this displacement candle that closed below this 1 minute fair value gap. And then I actually, because I saw that, I market ordered in at the second candle that got formed once this one closed, and I put my stop above the high. And now my target was that 15-minute fair value gap. Why that 15-minute fair value gap and not just what I was expecting before as the draw on liquidity down there? Well, because I said that was my invalidation point. If we end up getting a 15-minute candle close above that, we could find support in that area again. And we also ended up getting a market structure shift. We had a low, a swing high, a swing low, a lower high, lower low, higher high. That's a market structure shift, especially after taking out this level right there. And I also noticed that we had tapped into the daily fair value gap right there. So what I was looking to do in this instance now, I had switched up my plan, right? I had said, you know what? If we start to break on down, I want to see it just only be a retracement down into that 15-minute fair value gap to make back the loss that I had here, right? Ideally, my first trade would have been this one. And this one was a good trade because I did end up in break even, slightly above in profit based off of this trade. You know, it was a 1 to 1.3, not ideal risk to reward, but I sold the majority of my position here, and then I left one runner. And that runner, I put that if it ended up going above this high, which is also this 1 minute fair value gap that should technically hold us down if it wants to continue down, I should not go above that high. And quickly that runner got stopped out, and that was okay by me. I did not mind. So now we're hanging out in this 15-minute fair value gap, finding some kind of support, and now I'm just waiting to see how price is going to develop. I did trade on my other accounts here. I took a long off of this one when I stopped below this low, and when price moved on up here, and then the second time price moved on up to this high, I took my profit, stops to break even, got stopped out of break even. When this inverse got created, I went long again, stops below this low, take profit up here, stops to break even, and I got stopped out again at break even. Now on this account that I'm showing, it's already late at night, so the executions aren't showing up, but I usually do my trade recaps in the afternoon, and that's when it shows the execution stills. But with Apex, they reset the executions after 6 p.m. So sorry, I don't have them on here, but trust me, I did take these trades. If you doubt it, you can always ask me for the orders. I can send you a copy of the orders from the account if you'd like. But so yeah, on this account, I switched back to it, and I thought, you know what? There's no way that this is going to just go down now. It's just finding support, especially because here in Q2, we manipulated down. Okay, we had a very high probability of it coming back up. So when I saw this inverse fair value gap get created but then traded down below, I did something I don't usually do, and that was, if we reclaimed that as a level of support again, I'll go long and I'll put my stop below this low, and I'll target, you know, pretty much a decent amount of money to be able to make back what I usually risk. And so I wasn't really targeting anything crazy. I did note this swing high here, and I wanted to see us move up above that. And I really wanted a new high of day. That was my main target here. I wanted a new high of day up here, which would have been a nice 1 to 2.2 risk to reward. But unfortunately, we did not get that, right? So I took some, like 3/4 of my position off there, put my stop slightly above break even, and it came down, wicked me out, and then it ran back up one more time, but that's totally fine, because if you notice, price then just consolidates for the rest of the day and sells off after the closing. So overall was a good day. This trade should not have been taken, and yes, I was wrong, right? I came in with a bearish bias, but I stuck to market structure. We needed this retracement down into a high confluence area to be able to reverse to go back up. Price action was a little choppy today. It was a little hard to get those right A+ entries, but you know, it was definitely a place for unseasoned traders that would have gotten wrecked. I know in the past I used to get wrecked on days like this, and this is where patience is super important. Patience is very important, okay? Don't rush to be getting into trades. Make sure that you wait, because I rushed here. I rushed. I would have had a much nicer day if I had not taken this trade, right? I took 2 W's. 2 W's. But regardless, you know, things happen the way it does. And you learn from your lessons. So we'll see what tomorrow brings. Hopefully you guys did not have a red day today. And, you know, God bless. Peace.